Okay, so we're going to debit or credit equipment?
You're gonna credit.
Credit equipment. We want it to go away. How much are we going to credit the equipment for?
For the cost that we sold it for. Maybe not.
So think about on your books, on your balance sheet, how much is it showing up for?
On the price that we bought it for.
Yeah, we always keep it at this amount, and then we
Okay.
decrease it over time according to our accumulated depreciation.
Makes sense. So we're gonna debit or credit that full amount.
Yeah, so the 33,600, is that right?
Yeah.
Okay. All right, what's the next most obvious thing after equipment?
The most obvious thing.
Yeah, we're selling.
The accumulated depreciation.
Okay, that's next. Well, how much are we going to debit or credit accumulated depreciation?
Debit that.
Debit. And how much are we going to debit?
That same amount.
Not the same amount this time, because did we have that same amount in accumulated? The last one we did it the same amount because that was how much it is.
Right. Okay.
Appreciated,
So
right?
We're gonna debit that amount, 23,520.
Yeah, if we've kept good notes on our tests and stuff, if we've gone through this, all we do is we just look back and see what we had calculated.
Okay.
So we're going to do the 23,520. Okay.
Okay.
Okay. Now, what's the next most obvious thing? Don't overthink it.
The next most obvious thing.
What are we doing with the computer?
We're selling it
For what?
for cash.
For cash?
Okay, that's the next one. We're gonna debit
Yeah,
that.
we're going to debit cash, right? How much cash did we get?
I don't know. Wait, would it be the 13,440?
Uh-huh. Yep. So 13,440. Okay. Now, if when we're sitting on the test, we get confused and we're not sure if this is a gain or a loss, we don't remember the rule, whatever, we're going to add this up and compare them. If the debits are smaller, it's a
Right.
loss. If the credits are smaller, it's a gain.
Okay.
Okay? So just tell me what this number equals, just really quick.
That equals 36,960.
36,960. Okay. Then all we need to do is we can just subtract these two numbers, and that'll give us what the gain amount is, or we've already calculated it, right?
Right.
So we just put it in gain.
You're gonna debit that, right?
Now you're going to credit gains. Remember, debits have to equal
Okay.
credits.
Yeah.
So that's kind of the test. If you're not sure,
Yeah.
if it's credits are smaller, it's a gain because it's like a revenue.
Mm-hmm.
If it's debits are smaller, it's a loss. And so it was 33,660. Now, when we add these two up, it'll equal 36,960. Add those two up and they're balancing out. And then we're all done. But we don't need that in anywhere. It's just a check my work type thing
That's fine.
to make sure.
That makes sense too. So then you'd have to. Would you have to touch accumulated depreciation again then?
We've already taken care of it, right?
Yeah.
It's already gone. It's no longer on our books anymore.
So then these, let's see. These next two accounts, that's what so we've already done cash, but then gain.
To record. Oh, okay. Sorry, we skipped the first part of it.
Oh, that's okay.
I didn't see, so. All right, so first it's asking us to record the depreciation for the year. How much was our depreciation in 2014?
The depreciation, that 3,360.
Right.
Yeah.
Okay, so what's the journal entry to record depreciation expense?
We're gonna debit the depreciation expense
Okay. For how much?
for that amount.
For 3360. Okay.
And then what would we do? We would debit that accumulated depreciation.
Debit or credit accumulated?
Oh, sorry, credit.
Credit, because we're adding to it this time, right? Okay. So that's all they're having you do first.
Okay, so here would be depreciation expense. So an accumulated depreciation for equipment. So that would be, yeah, 3360. So then we'd have the cash here. Then we'd have our accumulated depreciation, correct?
Mm-hmm.
Then $23,520. And we'd also debit our credit, sorry, our gain.
Yeah, we credit a gain.
Okay.
So think about a gain like a revenue.
Okay.
We credit revenues to make them go up. On our income statement, if we have a gain, it increases it. So
Right.
it's a credit.
What's the last one then? Remember there's a.
So you got cash. We got cash, accumulated depreciation, equipment, and gain.
Cash accumulated depreciation, equipment right here, right?
Yeah, they don't have to be in any specific order. You just want to have your debits on top and your credits on the bottom.
Okay, so equipment here of 36,000, 33,000.
33.6. Okay. Now your debits and credits aren't going to equal.
No.
Okay. So what's different on the board than what you got here?
Did I put this here? Correct.
Yep. There we go. So why are we debiting accumulated depreciation this time when right before we credited it?
Because we were. That's a good question. Because we were trying to get rid of the accumulated depreciation right here, right?
On the second one or the top one?
So this right here where it says to record depreciation on computer sold, this is for this one, right?
Mm-hmm.
And then this one, I don't know why are we debiting it here?
Okay.